Welcome to the Liquidity.io podcast, a space where we talk about how technology is changing investing and opening up opportunities that used to be available only to a few people. I am Tanvi Gupta, and today we are diving into a topic that is generating a lot of attention: how private company shares become tokenized. What does it mean? How does it work? And most importantly, how can it reshape the way investors like you participate in private markets? To help us unpack this, I am joined by Marshal Tavakar, Principal Product Manager and an expert in private market and tokenization. Marshall, it's great to have you with us today.
Thanks, Tanvi. I'm really looking forward to this conversation. It's an exciting time for private markets and investor alike.
So let's start at the very beginning. People often hear about public markets like a stock exchange, but when we say private markets, what exactly do we mean and how are they different?
Great question. In simple terms, public markets are where companies list their shares on stock exchanges. For example, Apple, Amazon, Tesla. Anyone with a brokerage account can buy and sell shares instantly. Private markets, on the other hand, are where companies raise money without going public. These could be high worth startups or family owned businesses. Their shares aren't listed on exchanges, which means buying or selling them is complex, often restricted and illiquid.
So if I'm an investor, the public market feels open and transparent, but the private market feels closed off and harder to access. Is that right?
Exactly. In public markets, transparency, liquidity, and accessibility are the default. In private markets, you often face barriers, high minimum investments, long lockup periods, limited buyers when you want to sell. That's why historically, private market opportunities have been limited to institutional investors or the ultra wealthy.
That works perfectly. Now, if I put myself in the shoes of our audience, business professionals, retail investors, or even startup employees with equity, what are the real pain points they face in private markets today?
There are three big ones. Access. Most investors simply can't get into high quality private deals. Liquidity. Even if you own private shares, selling them is extremely difficult. You are locked in until an IPO or acquisition, which could take up to 5, 10, even 15 years. Third one is transparency. Investors often feel they are operating in the dark. Valuations, reporting, and governance aren't as open as public markets.
It makes sense. So, for many investors, private markets sound exciting, but the problem is they don't really get a chance to enter. And even if they do, they can't easily sell their share when they need to. It feels like being stuck with an opportunity you can't fully use.
And this is where tokenization becomes a game changer. By turning private company shares into digital tokens, we can actually make it easier for investors to buy, sell, and trade them, just like they would be with stock in public markets.
Let's break it down. What does tokenization of private company shares really mean?
At its core, tokenization is about taking an asset, in this case, private company shares, and representing them digitally on a blockchain. Each token represents ownership. By doing this, we can bring three major benefits. Fractional ownership. Investors don't need $500,000 to participate. They could even start with, say, $5,000. Liquidity through secondary markets. These tokens can be traded much more efficiently than paper shares. Third one is transparency and security. The blockchain provides clear, immutable records of who owns what.
So it is essentially about making private market work more like public markets, but without forcing every company to IPO, right?
Exactly. It's about giving investors flexibility and access, while giving companies a new way to raise capital and engage shareholders.
But let's be honest, when people hear blockchain or tokens, there is a still skepticism. Some people think it is complicated, risky, or just hype. How do you address those doubts?
Totally fair point. The skepticism comes from crypto speculation, but tokenization of private shares is different. Here, tokens are not speculative coins, they are digital representations of real equity, backed by legal agreements. The technology is just the medium, not the asset itself.
That really helps clear the air. So, tokenization isn't about chasing hype, it is about using technology to make ownership more flexible and transparent. Now, for our listeners, the natural next question is who is actually making this happen? Because it is one thing to understand the concept, but another to see it in action.
This is exactly where Liquidity.io comes in. We have been working on bridging that gap between theory and practice.
So, can you walk us through how Liquidity.io is changing the game?
Liquidity.io is essentially making private markets more open, efficient, and investor friendly. We provide a platform for tokenized private shares where investors can access opportunities and companies can manage the shareholders digitally. We focus on compliance and security, so every token is backed by proper legal frameworks. And most importantly, we are building a secondary marketplace that gives investors a way to trade their tokens, bringing much needed liquidity.
Could you share a real use case so our listener can visualize how this works?
Sure, imagine a high growth startup, let's call it Technova. Normally, employees with equity can't sell their shares until through liquidity.io. Technova tokenizes employee shares, allowing employees to sell a portion of their equity to investors earlier. For the employee, it means financial flexibility. For the investor, it means access to a high potential company. For the company, it means happier employees without going through a full IPO process.
That's powerful. It is win-win scenario. Let's address the big fears: regulation, trust, and adoption. What do you say to an investor who is still hesitant?
I completely understand the hesitation. These are important concerns. Let me break it down. Regulation. Governments and regulators are actively working on clear rules for tokenized assets. Platforms like liquidity.io are designed to follow those rules from day one, so investors don't have to worry about without on the wrong side of the compliance. Trust. Each token isn't just a piece of code. It's backed by real company shares and legal agreements. That means when you hold a token, you legally own that share, just like traditional equity. The blockchain is simply the system that records and secures that ownership. Adoption. We are still early, but adoption is moving quickly. Just like public stock markets were once new and unfamiliar, tokenized markets are now gaining traction. More companies are exploring it, more investors are joining it, and we are already seeing real transactions take place.
What should people know before they start investing in tokenized private market?
First, this should be part of a diversified portfolio, not your entire investment strategy. We typically recommend allocating 5 to 15% of your investable assets to private markets. Second, think long term. While tokenization improves liquidity, these are still fundamental long term investments. Third, do your homework. Just because something is easier to access, don't mean you skip the due diligence.
So, before we close, I would love to hear your final thoughts. For people who are curious about investing in private market but still feel hesitant, what would you say to them?
I'd say this, don't think of private markets as an exclusive club anymore. Technology and platforms like liquidity.io are opening the doors wider than ever before. If you're hesitant, start small, educate yourself, and understand that tokenization is simply making traditional ownership easier, safer, and more flexible. You don't need to be a millionaire to access opportunities that were once away. You just need to take that first step. The future of investing is about choice, access, and transparency, and private markets are finally catching up to that vision.
Really appreciate your time, Marshall. Today's conversation has been eye opening, and I am sure it is giving our listener a lot of clarity too. Thanks for listening. If you find value in today's discussion, make sure to subscribe. We will back with more podcasts and videos on topics that matters to you.